Okay, traders, it is midday, and we are going to go over a series of charts that should show us where the market is going next. At least that's what we hope to get when we do our technical analysis. These charts will be based on, or this class will be based on technical analysis and what the market usually does once we find formations. Now, we all know that futures trading can be extremely risky and cause substantial financial loss. We all know that futures trading is not suitable for all trading accounts. And if you do not place stops and place them first, you absolutely shouldn't be trading markets. But for you cowboys that understand the risks behind trading and understand something about technical analysis, it gets laid out before our eyes more often than not, traders. What we are looking at right now is the NASDAQ daily bar chart. I'm going to ask a question of my OMNIacs. How many of you recognize this chart right here? How many of you have seen this chart and seen me put it before your eyes, but when you seen it last, nothing before this line existed? Everything from here was the last thing that we had. So we had to the left of the line, all of this was in place, and none of this back here existed. How many of you remember me showing you this chart with the left shoulder, head, right shoulder, then telling you that the right shoulder and the left shoulder would sort of lend itself to the next head? And what does that do? It creates tops and bottoms. Right? You traders remember that? You were with me for this chart. Well, since then, I have just continued updating the chart. It turned into another head and shoulders, another inverted head and shoulders, and look at what finally happens in the end. You get a bull flag inside of this right shoulder, right here, bull flag, right? I'll just define it for you to make it slightly easier. You get the bull flag inside this shoulder, and away it starts to go. Now, where are we? We are here, rallying exactly like we should have. And traders, if you want to really take a look at this NASDAQ chart a little closer, do you know what's starting to happen now? The whole entire thing is becoming a huge inverted head and shoulders. Look, you have the left shoulder. This entire package is nothing more than the head. All of these inverted and upright head and shoulders are the head, and we are now going to start to build a right shoulder over here, making this entire chart just one enormous head and shoulders. That's what should start to happen now, and that projection is literally for 5,000 in the NASDAQ, way, way out into the future over time. As you know, we are short-term traders, so we like to figure out what's coming next, so we'll back this stuff off. I just wanted to show you what's starting to develop, something to keep your eyes on over the next few months. But that's what I think this whole region is down here with all of these little multiple head and shoulders building up. It's basically the head of a huge inverted head and shoulders. And as we know, traders, some of you may not know this, but a head and shoulders, one that looks like this, is your standard head and shoulders, where the head is above the shoulders, right? You fill in here, then you rally up and you fill in here for a while, you come back down and you have a head and shoulders. Generally, that's supposed to be a bearish formation, right? So when you have an upright head and shoulders, it is supposed to be a bearish formation. Pick up any textbook, that's what you're going to get out of a textbook. But when you take that head and you drop it down here, it becomes an inverted head and shoulders. The inverted head and shoulders is bullish. So if the inverted head and shoulders is bullish, then this huge pattern that I was just pointing out to you, that could literally be big shoulder, massive head forming, big shoulder starting to build up here, it could literally be the sign of what's to come next. So just keep that in mind for your slightly longer term view, okay? Right now it doesn't exist, but it does look like what is happening. When we go down, when we break this down to slightly shorter term, here we are looking at the NASDAQ. Your NASDAQ had this last inverted head and shoulders, the bull flag in the right shoulder, and now it is breaking out into what we like to call an F flag. And that's what's starting to happen now. And many, many times these F flags can become extended, and they stay for quite some time. We dub this the F flag. So that's what we're looking at now, and we did expect it. We put videos out over the weekend to tell you this was coming. We got long on Monday. We're long again for Tuesday. We bought the lows in both cases or near the lows. I like what we're seeing here for the future. So that's your NASDAQ, right? Let's just continue along. We're going to look at the S&P cash chart. S&P cash chart, let me just expand this a little so you can see it better. Here we are, the S&P cash chart. Look at this wonderful, wonderful channel that we're in. At minimum, it comes up here. It hits the top of the channel, which also puts us basically at previous highs. So that's what looks like is coming no matter what you think about the market. You cannot deny that it is in what we call an F flag, and it's on its way. It's also in a fantastic parallel channel, and ever since it started crawling above OTAPMA, it's really taking off. So we love the S&P cash. It looks fantastic on the daily bar, at least to go up and test previous highs. And previous highs, if you don't know what they are, traders, we'll just pull them up for you right now. Previous high was 1422.38 in the cash market. So we'd expect at least that. If you use simple trendline technical analysis, we've already gotten past what should have been resistance right here, connecting this high to this high, extending out to this high right here. That's a very valid trend line. We broke out above that, and now we're building the F flag, this being the flagpole, this green line here, and these little bars making the flag itself. That's our F flag after getting above the major resistance. So the market itself is looking fantastic, traders. Nothing we can do, no sense in fighting it. We go with the analysis when it's presenting itself in such an easy fashion. Now, trading is never easy. Nothing that we do when it comes to buying and selling is easy. However, the analysis and what direction the market will go to, that can be easy to judge. So that's why we're looking at all these charts. If you recall, and by the way, the F flag, why I tell you it can be extended, here was your last F flag. It just went on for weeks and weeks and weeks, and it started just like the F flag we're in now. A little flagpole started right here. Then the F flag began right off of it. Here we are with the little flagpole, and the F flag is starting. So that is very likely what is coming our way next. So that's what I've been showing you for the last few weeks, or especially the last few days. It's why I'm putting this class together. It's why all of you are in my class today. I wanted to make sure that you recognize we are now above this major resistance, and likely is that we are going to test previous highs, and you can see them with this red line stretching above the top of the chart. So there's your S&P market and your NASDAQ market. Let's go look at the Russell. The Russell, in a wonderful parallel channel, also creating some form of what may be construed as a bull flag when all is said and done right here. Right inside of the parallel channel, you got your bull flag being built. As long as we stay inside this channel, we should work our way higher. So your Russell, if you ask me, this is a pretty good looking chart. The daily bar right now looks like a down day, but the day is only halfway through. Have patience. Let's see what this market actually has for us in store before the day is over. But right now you're looking at a flag inside of a parallel channel in your Russell. Another pretty strong look, in my opinion. Now we are going to look at the Dow Jones Transportation Average. Okay, traders, we are looking at the Dow Jones Transportation Average daily bar chart. What I have recognized and what you can clearly see is that it's building a form of an apex with three top levels. This line, nice line for an apex. Then you have a secondary line. And then, of course, we have our outer trend line. It looks to me like we should easily best the OTAPMA average and start working our way first to this trend line and then up to the next one. Interesting about the transportation average, in most cases, the transportation average is deemed the leader of U.S. indices. In the past week, it has clearly been the follower. We have been going down. Look at this chart right here. Down, down, down. But that's not an F flag, is it? Like I just showed you in S&P and NASDAQ. We've been going up in S&P, NASDAQ, the stock market. They've been going up while the tranny is heading down. The tranny is lagging at this point. Today it realized it's in the wrong direction and is starting to catch up. So there will be times when the leader steps down from its leadership role and allows the other markets to become the leaders. That is what we're seeing now. It looks like the Dow Jones Transportation Average is literally playing catch up to the NASDAQ, the S&P, and the Russell. Again, look at these down days. That's the exact same week that I pointed out this crazy F flag that I just showed you on those other two charts. Remember I said, look, it starts with this little 3 bars down and then you're into an F flag. Well, that's what this should look like, but it's not leading. It's following. So for you Omniacs who have been following my videos for the past 6 years, you know I am very big on the tranny being the leader. But you've also seen me from time to time put out a series of videos saying, uh-oh, the jig is up, traders. The tranny's not leading right now. Let's use another market as the leader. This is a moment in time that is just like that. So bear in mind that the tranny's still doing its job, but it's not leading. It's just starting to pick up the rear a little bit. But overall, the picture is good. And the tranny is beginning to catch up. It's making its way past the first hurdle, which would be this trend line here. Gets past that hurdle. We have one more above the OTAPMA, and then after that, away we can go. So that's your transportation average. And it is lagging because look at what's leading. Of all things, the market itself, the industrial average, is leading, and so is the tranny. The industrial average and the NASDAQ are leading right now, not the tranny. So, here's what we have in our Dow Jones Industrial Average. Just because it's a chart we've been using for quite some time, we picked out a head and shoulders, talked about the failed head test, and that it should break down from there. So after we had our head and shoulders in place, we did expect a breakdown to come. And traders, I did a simple projection. I said, let's just take this shoulder right here and drop it down and see what our projection would be. And it gave us a projection for right about here. That's pretty darn close to what the low was, isn't it? That was a very nice projection. A very, very well played out head and shoulders. You had left shoulder, head, right shoulder, head test which failed. Perfect for the drop. The drop went literally within just a few points of where it was supposed to go based upon our projections. So that was what had happened in the past. And of course, right here, you may note that we got below OTAPMA, which gave us a problem. And the market did break. We rallied up, hit OTAPMA, came back down, hit OTAPMA, came back down, got above OTAPMA a little, came back down. This time got above, tested it right here on this day and held, and created a bull flag. That is bullish, traders. Now, we should minimal test up here. Once we test the top of this line, if we can break out of that, that should be a very smart rally, because what happens if the Dow breaks out of that trend line? Look where it comes in, traders. One of the great things about technical analysis is that it almost always all comes together if you view it properly to tell you what comes next. You always wonder what's going to happen when we get to a previous high. So I just drew this red line based on this highest high, the previous high. Look at where it comes in at the channel. You couldn't make this stuff up. You couldn't ask for more. I mean, that is your target, and that is that, no question about it. It comes in at the high, which you always would expect to test, and it comes in at the top of a parallel channel. Wow, just beautiful. Now, do the flag projection. Where does this flag take you? Watch this. Flag projection takes you, bingo, right there. Perfect. This has to happen. It's nothing in our industry is guaranteed, and no one can ever say something will definitely happen. But an analyst like me looks at this and says, that's got to happen. I have to do a video. I have to show everybody this comes next. I've been doing this for 30 years. I know what comes next. That's what gets into my head when I see something like this. Then I start pulling trend lines, and voila, here we are. It gives you a projection right there at an intersection of two major resistance levels. And it gives you the projection off of the flag. What more could you ask for? I say, go technical analysis, baby. What more could you ask for? That is technical analysis firing on all 8 cylinders. These are the things I've been looking at the last few days, which is what prompted me to invite you to my class. But there is more. Let's continue. We also have the DAX. For you German traders, you European traders out there, the last thing that I played with in the DAX, because I don't trade the DAX very often, I do look at it every night, there was a bull flag that was building here. That bull flag panned out. Let me just darken it in for you. Last time I pulled this chart, this was all I was looking at, was this bull flag to wonder if it was going to work. The bull flag broke out. It worked perfectly. What is happening now? Well, it's basically starting to trend channel. Look. You're just starting to create some kind of a strange channel here. It might not be perfectly parallel, but it's working. So we remove the flag, and we just look at what's happening now before our eyes. And when you look at that, that's not bad, traders, because looking at it closer, a flag has been built right here. Boom. Here's your flag. We make it red just so that it matches its pole. There is your bull flag in your European indice. Bull flag in your European indice. This is telling you that the fundamentals in Europe are slowly beginning to get better. Fundamentals come out in the charts first. This is a pretty decent rally. Take it to a weekly. On the weekly, pretty decent what's going on here. Let's do something. We remove that little parallel channel which worked well, and we simply just re-snap one over here. This is what's going on now. It should likely go higher, and there is more. You know, it follows the U.S. It doesn't lead, right? If you notice what I just showed you, the U.S. is above. Remember what I said? We're going to snap? We're going to snap our high to this, to that, and to the next one. And I showed you how the U.S. market was above this resistance. Well, look at how the follower is only at the resistance now. And this, traders, is the DAX weekly bar chart. It needs to get above this resistance. Why? Because the U.S. market already has. And then you can take another trend line way back from these highs and pull it across and get a secondary resistance. We have gotten above the first one and are heading towards the secondary already in the U.S. We're waiting or expecting that the DAX will follow the U.S. markets higher. So the DAX is looking good here. Then if you want to remove this and wonder what's going on here, there's two things. A, V-shape. V's almost always produce some sort of a propulsion higher. And if you also want to use your imagination a little bit, you can say, oh, wait a minute, is this another one of Oscar's insane head and shoulders that he's always talking about? Well, yeah, on the weekly, it sure enough is turning out to be an inverted head and shoulders. It's building now. As it builds this right shoulder, it should slowly move up and down, get above this line, and move out of here. What does it remind me of? It reminds me of the last time I seen something look sort of V-ish down here. And what did it do? Almost the exact same thing. So that's what I'm kind of expecting to happen here. And then after you have that V bottom, you go into your F flag. Now, that's what I would expect to see happen coming out of this V, getting into an F flag at some point and just moving along. So the analysis is certainly pointing towards better days coming our way in many of our markets. If we go back to a daily and then, now remember how pretty the daily looks. That's your DAX daily. That looks good. This is our bond market. The bond market is bearish at the moment and is now getting below my OTATMA. Very interesting. Is a top in place. You know, there is no outside bar. There's no outside reversal day. There's no big head and shoulders building except for this thing right here. Let me just point it out to you. There is that. Is that big enough to be the top of a market? No way. Not something as big as the bond market. It's too small of a head and shoulders to be the top of the bond market. So I do not think that we've completely topped out in bonds. I think that we are cooling off and they're backing off and probably they're going to get down to this. And once they do, you may find buyers come right back in. That would also coincide with the lows of this previous move. Look, boom. If we get down here, actually right about here, if we get down here, it coincides with the lows of this previous move back here, the springboard that sent us higher. It doesn't look like the top of a market yet. If it is going to top itself out, we'll find out. But for now, when you look at the daily, it certainly looks weak. If we take it out to a weekly bond chart, it's not as bearish as the daily. Look at that weekly. That's a strong bull market in a pullback. So what's the pullback it down to? Maybe this area right here, which is on the weekly chart. This would put you at support, major support. Look here and here and here. That's where the trend line begins. It's where it got its life from. That will be support. Unless you breach this, you cannot say the top is in. If in fact you breach this, then maybe, just maybe, we can begin to call top. But the market has to do that for us. Look at this staging area right here. This would be a very, very nice plateau for the market to bounce off of and take off again to the upside. Two reasons. One, you have the highs here, which started a decline, got above those highs, tested them, rallied, tested them again, and exploded for new highs. So this entire area becomes valid. It also brings you right back into OTAPMA. As I've mentioned, analysis always comes together. It's a big 360. So now you come all the way back down to OTAPMA into the support zone. That would not tell you that you've topped. That would only tell you that you're hitting a support zone. If we can break this area completely, you can then most likely go short bonds with a big thick stop and ride them all the way back under 115, probably under 110. But for now, the Fed controls the bond market. The Fed is bigger than any other entity on the planet that trades, and you do not fight the Fed. The analysis says it's only going to back off and then most likely hold. The Fed's not going to let the market drop unless they think it's time to raise interest rates. So the bond market is tricky, but pointing towards more pullback for the next week or so. If it pulls back more, it propels the S&P higher. So that's how your bonds fit in. Let's go look at dollars. Dollar index. As we know, the dollar clearly is king. The dollar had its bull flag here. If you recall, we were monitoring that bull flag. The bull flag broke out. It basically met. In fact, it got a little bit higher than its projection. This would have been its projection. It got slightly higher, but not by too much, and then created this parallel channel. The parallel channel, if you ask me, is more or less part of something larger. It's probably one big bull flag, the whole thing. See if the weekly will illustrate that for us. Here is the last time I pulled this dollar weekly chart. We were in this parallel channel. We are still in it, clearly, and it looks like it's going to stay in it. But what I was trying to show you was that whole thing is probably just one big bull flag right here. This probably is some weird bull flag. Because I don't know that the dollar can go down yet with the Fed buying bonds. You need U.S. dollars to buy bonds. Whether you printed them or not, you got to use dollars to buy bonds with. They're not done buying bonds. And the rest of the world is starting to come in and buy our stocks and our real estate. And they need U.S. dollars to do that with. And if any other foreign entity wants to buy U.S. bonds to be in that safety play, then they have to get U.S. dollars first to buy those bonds with. So, the dollars are bullish, the bonds are bullish, even if they back off, they're bullish for now. So that's how the dollar fits into this puzzle. Then we have some other markets that we've been trading with lately. Wheat market. We think that the grains, for the most part, have broken. Traders, 3 days ago, last Friday, when this bar came in, I basically said this is how tops are born, or this is how tops are made. And I think the top is in, and we should start shorting it now. I pointed out this big bear flag. Here's the flagpole. The parallel channel is the flag. And we started shorting the wheat. And so far, so good. Wheat is very much near its lows. We are still short the wheat. Thank you, OMNI. OMNI started selling wheat at 900 and is still on the short side all the way to here. So we literally caught right about here. This is where we got in, and we've been in since. That looks like it wants to break down much, much more. This whole thing looks like a top. A day like this tells you for sure you're going down for at least a few days. So we think that likelihood a top is in the wheat. We'll take it one day at a time. Switch the wheat out to a weekly. And you can see that you had a bull flag here that is failing. So the daily picture looks much prettier as far as the bears are concerned. And this was one of the major reasons why we ended up in the wheat trade. Of course, there's a dozen technical indicators that pointed us towards the downside as well. Your slow stochastics clearly pointing lower. Your DMI, directional movement indicator, clearly pointing lower. And one of my favorites, the MACD down here, clearly pointing lower. Your RSI pointing lower. The whole package is pointing lower. So clearly the wheat is a short for now, which is what Omni has reacted to since Friday. And I don't think the grains are done yet. Look at the beans. The soybeans. This is a big bull flag, traders. Or is it not? When these days did not exist, 1, 2, 3, we wrote this as a bull flag. This was as of last Friday. I said, ooh, look at this, big bull flag. We want to be long the beans, the soybeans. Well, they did go up Monday. We did not even try and trade them because we were selling wheat. But you look at the beans, and they broke out for one day and have failed and came right back down. Is it a bull flag, or is it morphing into something different? Maybe it's simply just a channel forming right here. And it's just treading some water right now, or marking time till the next fundamental comes out. Because quite frankly, this chart's not all that bearish. It's not so top looking. It very well may be a top. What you might recognize is this. You got to use your imagination slightly. But if you go like this, you have an upright head and shoulders, which then lends its right shoulder as a left shoulder to another upright head and shoulders, which then lends itself to this head, which maybe a right shoulder is going to build, and that would be a sign of a top, right? Multiple head and shoulders gathering together creates tops and bottoms. So are the soybeans topping out? Has the bull flag morphed into something else? I think yes. I think that's what the bull flag is, what you're looking at right now. And it's becoming top heavy, and it's only going to mark time a little bit longer before it starts its descend. So that's what I'm getting from the soybean chart. So traders, I'm hoping that when we look at charts of this nature, and let's go back, when you look at charts of this nature after coming to a class like mine, you'll recognize when we're actually getting into an area that's creating a bottom or a top for you. What I just showed you in that soybeans chart is almost the exact opposite of what you're looking at here. Multiple head and shoulders, with the right shoulder lending itself as the left shoulder to this new head and shoulders, and then this lending itself as the left and right shoulder to this head and shoulders, and so on. And when they gather together like this, they're creating a top or a bottom. You need to use your analysis to tell you what that's going to be, top or bottom. It was obvious that it was creating a bottom type area for NASDAQ, which is why we're going after the long side. And proof is this F flag that has formed since these inverted head and shoulders started to gather. That was my presentation I put together for you last night. I wanted to show that to you today. This is why I brought you to my class. I would like to thank each and every one of you for showing up to today's class. And I'm really hoping that this class will help to keep you in tune with market movement going forward. Thank you so much for coming today. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.